Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 39th COT report of this year. Don't forget we have two new services out, futurestradingguides.com, focusing on futures markets, and FX Trading Guides, which of course is focusing your attention on forex markets. Also, we have recently added cryptocurrencies to the analysis as well. Back to the review, and let's start off with our first market, which is the S&P 500 with a 35% change in commercials positions. Pretty large change, although as you can see on the chart, we've seen pretty decent changes in the past 52 weeks. It's definitely amongst the largest ones in this 52 weeks range. It is a bearish COT change signal suggesting a bit of a decline coming early next week. Jumping to the 5-year chart, you may see how extreme this market is. We are definitely very close to the bearish extremes. As you may see, of course, significant correlation between indexes suggests or advises you to have a look at other indexes COT report as well before any serious conclusion of the S&P 500. Nevertheless, if we just look at the COT report here, you may see that from both major COT signals, the extreme and the COT change, we are getting bearish signals at the moment. The next market is the natural gas with a 33% change in commercials positions. You can see that change size over there. Commercials just gone close to the zero line. They're still above it, so they're net long, but as you may see, easily they could go net short maybe next week or the week after if this trend continues. Of course, if we open a 5-year chart, you may see that slowly, steadily, we are getting closer to bearish extreme levels. As you may see on this 5-year chart back over here in the first part of 2017, we had this bearish extreme, which of course ended this little rally that we saw over here, and we are getting closer to those levels as the price of natural gas slowly, steadily rises. The next market is the Canadian dollar with a 26% change in commercials positions. You can see that change over there, definitely much greater than average. It is a bearish COT change signal, suggesting there could be some decreasing prices coming early next week. Opening a 5-year chart, you may see that we are overall a bit closer to the bullish side of the market. As you may see over here, we had this very significant bullish extreme in the Canadian dollar, which of course was a very helpful signal for us to go long. We had this significant bearish extreme, of course not that far afterwards, which signaled the end of this rally, from which, as you may see, prices have been declining ever since. Now we are getting closer and closer to bullish extremes, suggesting there in the medium to long term we could see higher prices coming in the Canadian dollar. Moving on to large speculators COT Extreme, we have to open the gasoline market because there's an all-time COT Extreme over there in large speculators positions. You can see that over here on the chart. So this is of course an unquestionable bearish extreme, suggesting in the medium to long term we could see lower prices coming in the gasoline market. Gold is our next market with an 875 report extreme in large speculators. The exact same extreme can be seen in commercials as well. You may see commercials being just barely above the zero line, net long territory, while large speculators are net short currently in the gold market. Of course, this is a bullish COT extreme. And if we look at other metal markets such as silver, palladium, overall in metals, we can see and witness a bullishness from the COT report's perspective, which of course coincides with the extreme that we just have in front of us right now in the gold market. So of course this suggests that there could be a bottom developing soon. We may easily see higher prices coming in gold. The next market and the last one for this review is the Australian dollar with a 184 report extreme in large speculators position. You can see that over there. Of course, commercials are pretty extreme as well. And this is, of course, a bullish extreme in the market, suggesting prices or price of the Australian dollar against the US dollar should go upwards north, and that's what we're going to be waiting for. The last extreme, as you may see here from the second part of 2017, you can see this bearish extreme was a helpful signal, pushed prices down, and since then the extreme has widened towards the bullish side of the market, and we should be expecting a change in this downtrend in the Australian dollar. So that was all for this review. Of course, you can have a look at other COT charts or on our COT charts page. A more in-depth and detailed COT analysis can be done over here. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.